Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. A lot to go over this morning. We got the ADP private sector numbers. Yesterday, the JOLTS data came out. We also got jobless claims just a little while ago. A big data deluge, and ultimately the non-farm payrolls report is coming out tomorrow. How are the markets reacting? I do want to get right into the data and the charts. So one of the things we see is a lot of chop over here on the S&P pre-market. Again, you can see that we were kind of trading neutral to positive, then took a dip to the negative, now slightly negative on the day. What were the key data points this morning? So what I have is yesterday's data as well. The JOLTS data coming in much lighter than expected. 7.67 million versus 8.03 million expected. That is a big miss in terms of how many job openings. And just to go over it, the JOLTS data is how many job openings in the U.S. economy there are. So the less job openings, it means businesses are not looking to hire. There's less offerings of, hey, we need to hire someone here, we need to hire someone there. So a lower number is not good, and a miss like this means that things are deteriorating very, very quickly. It's one of the reasons yesterday the S&P 500 early before this number was kind of drifting higher, and then it kind of took a leg lower and closed around the flat line after, again, that big drop on Tuesday. All right, next up this morning, ADP private sector employment. So this isn't the non-farm payrolls report that we're going to get tomorrow at 8:30 a.m. This is the private sector number. It came in at a huge miss, 99,000 added versus 142,000 expected. So that's a big miss. That's like a 30% miss on this number. And again, that tells us that it reinforces the JOLTS data from the prior day, that the economy, or at least the labor market, is weakening very, very quickly. If we look at the S&P 500 here pre-market, this is where it took this dump right here on that data, the ADP private sector number. Now, why did it come back a little bit? Let's talk about this. Why have we floated back up? Simply put, it was this number right here, the jobless claims. Now, the jobless claims number is how many people are filing for unemployment. The expectation was for 231. It came in at 227. It was better than expected. All right, so again, people are trying to make sense of this, and I'm going to make sense for you guys very simply. When you have an economy that is slowing down, do businesses go straight from hiring people to firing people? And the answer is no. What happens? Businesses go from hiring people to not hiring people to eventually firing people, right? I mean, it's a slow progression. And what the data here is telling us is that's exactly what is happening. So here you have businesses, they're not hiring. They're closing it down. They're saying, hey, we don't want to put up any wanted signs for people for employment. The data right here, it's dropping very quickly. This is how many people got hired in the private sector. It fell sharply. That means same thing. Businesses are stopping their hiring practices. This number, historically 227,000, is still really, really low. That tells you businesses are not firing people. Really, really important data point right there to understand the difference. And that's why the market said, okay, at least we're not seeing massive layoffs where people are having to file for unemployment. Therefore, we can say, okay, the economy is not falling off a cliff, at least for now, but we'll watch that jobs number tomorrow to give us more insights. All right, so again, that's why the markets, again, we are net negative here just by a slight amount, but we're not kind of, again, falling off the cliff like we did on Tuesday. But I will say this, you know, the price action yesterday, these numbers right up here, this is making investors really, really nervous, really nervous. If we get a bad jobs report tomorrow, that could be another 2 to 3% down day on a Friday. So again, you can look for that jobs data, which I think is expected to come in around 160,000 expectations-wise. You want that number, if you're a bull, you want that number to be at expectations for at least people to say, okay, it's not like a horrible number or better than expectations, and then the markets could actually rally tomorrow. But if that number comes in below 100,000, I think you get a big down day tomorrow in the stock market. All right, so again, right now, S&P 500 is holding steady here. You can see, again, just a little bit of an uptick here off of the lows. Basically, if we look at where we closed yesterday, hard for me to see, but it looks like we closed right here yesterday. So you can see that's, again, and my lines aren't always straight, but it just puts us at a slight negative on the overall pre-market action. Okay, Next up, let's take a look here. A couple of the concerning factors that I'm seeing in the economy. If we go to our homepage, I posted these just the other day, but if we scroll down on verified investing, which again has all the data you need, folks, like literally all the data you need. If we go to the yield curve, all right, we look at the yield curve and what it's showing us, we know that historically it's when the yield curve uninverts that things start to get messy. And so what we see here is this gray area right in here. This gray area is where recessions occur, right? So if we look at this, we can see here's your inversion of the yield curve. Here's where it uninverts right here. And about 3 months later, we enter the recession. This gray area right here is recession. Okay, if we look here in 2000, by the way, this was the dot-com bust and the recession that followed that. This was your 2007 high, and then your inversion right here. It uninverts about 3 to 6 months later, recession. Right now, COVID was a little bit of a weird scenario. It was more of a black swan. We did see a brief inversion, and then it came up, and then we did have a very short recession right there. But ultimately, the thought process, and by the way, I'm only going back to 2000, but you could actually go back to the 70s and see this happening over and over again. And the idea is we're right here at a zero. Basically, we're uninverted. We're not net positive on the inversion. We're basically flat, but nonetheless, we're back to the flat line. So what you expect is the uninversion to take place shortly in the next, let's say, week or month. And then within 3 months to 6 months from there, we will be in a recession, or at least that's what history and the data show you. And again, for me, folks, it's all about saying to you guys, listen, it's not about my personal preferences. It's not about this. It's not about that. It's about the data. The data and the charts are what guide me. And again, that's what I'm going to give you guys. It's no narratives, no BS, not personal preferences. The data is what matters, and that's honestly how I make money in the markets, is by going with the data, with the probabilities. Okay, so that's your yield curve that we have to continue to watch here. If we flip back here, again, there's lots of other data. Don't forget, we also have on the home page, you have all the data inclusive of what we have here, which is our earnings calendar. And the big thing to watch today, the reason why I'm bringing up the earnings calendar right here, is you have Broadcom. After the bell today, Broadcom reports. Broadcom's a $700 billion company. It's a big company, and it's an AI chip company. So I think it's the second biggest to NVIDIA. And the reason why I bring that up is because this will be a big impact to the AI trade. If Broadcom is down 10% after earnings, watch out tomorrow, even if the jobs number is not horrendous, because the markets will be in trouble. On the other side, if Broadcom can show us some good light, that there's still good resiliency in the AI chip market, you might actually see stocks like NVIDIA rallying to the upside. All right, so that's where we are right now on that front as we continue through. And then don't forget, folks, and I just wanted to point this out, but if we go down here, you have your education section. All the way down at the bottom. Lots of good education here, including the Apprentice Trading Library here. And I'm just going through here. In fact, the Apprentice Trading Library is free. There's a drop down right here. And every week we post a new educational free video for education purposes, right? So again, we already have, I believe, a bunch out here for you guys to view. Don't forget, these are lessons that if you want to improve your knowledge on education for the financials, for understanding technical analysis, for understanding market psychology, again, all of these are videos here and they're all free, and we literally will be adding a new one free every single week for you guys. I believe they debut on Sunday. So just the goal here again is, if you guys end up being a member and part of my service or part of the earnings trader service or any of these other services, that's bonus. That's great. I mean, I love it. But I want people that say, hey, listen, I don't have the money for a service right now. I still want to learn. Free. Homepage data, free. Free, because ultimately our goal here is to help you guys. You guys support us. We support you guys with lots of good free content that is quality content, real content from institutional investors, from the concepts that go far beyond what retail investors usually have. All right, guys, on that note, let's get back to some charting here as we go into things here. And again, flipping back, AI is probably your biggest pre-market mover here. They reported earnings yesterday after the bell, a huge drop. Again, not really hurting the AI stocks like NVIDIA. NVIDIA was down last I checked, but it was more down because the markets were down. But big drop here, trading around $18 to $18.50 after closing at around 23. And if we go to the daily chart, we have to start looking where is a good technical level here. Well, if we zoom out, we have to say, okay, Well, number one, the obvious level that I'm seeing, if it flushes today, is this pivot low right here. And that's around $17, maybe $17.15. So let's keep an eye on that today. That might be a day tradable level. If we look at the chart, you can see very clearly this pivot low right here. That is the level to watch, right? So that one there, if we flush into it, you might get an opportunity for a technical day trading bounce. Now, would I swing trade it down here? Probably not, guys. Again, I'm still very concerned, and I've been concerned for a long time, that these AI stocks are going to see slowing growth. Not that they're not going to still grow, but at the rate that they're growing, just the law of large numbers aren't going to be sufficient. And the competition for an AI type company, C3 AI, is only going to grow. And therefore, again, margins are going to contract. And I've said this about NVIDIA for a long time, even when it was trading at 140. I said, guys, it's going to go the route of Tesla. And Tesla's a great company. I love Tesla. But ultimately, if you go back to 2021, it collapsed 75% off of that. NVIDIA will eventually. By the way, what about SMCI? Speaking of which, this is another stock that I was short, and I was actually getting crushed on it, right? I was absolutely getting crushed on it, but I stayed firm because I've been around the block many times. And I said, listen, yes, the emotion, the greed is driving this higher. People weren't thinking about anything but, oh, it just goes higher and higher. And I said, listen, it's going to come back down. And lo and behold, what happens here, guys? Oh, there's not that one. Here we go. Here's Super Micro. But here you have the head and shoulders pattern. That was a dead indicator. The top was in. The calculated move was down to 500. It's now even trading back to about $400 from $1,200. All right, that's a huge move. And the chart really gave us an idea, plus just my knowledge of doing this for 25 years. I've seen so many of these scenarios where, every time people say it's different. In fact, I was told this about SMCI, about NVIDIA, all of these plays, that, oh no, AI is different, AI is different. And I'm like, dude, it's no different than the internet. Before the internet, what was our lives? I mean, heck, you guys wouldn't even be watching me right now if we didn't have the internet. It changed our lives. It didn't mean Cisco didn't drop 75, 80% after that bubble. And again, NVIDIA, I have a downside target of $50 on it right now, so it's not a full 75%, but it's still a significant drop that I think within 18 months, that's what Tesla took, about 12 to 18 months, it bottomed out. And then it honestly had a great rally. We've seen it rally back precipitously. But the point being is that eventually these things do come down, and SMCI right now has come down already massively from its recent highs. All right, next up, we have a couple other movers. Just checking in on NVIDIA, trading just fractionally lower on the day. You can see it flushed out on those ADP private sector numbers. Got to bounce back up here. Again, there is a gap fill. This line's actually a key support level, and also that Broadcom number after the bell will be really important. Don't be surprised if this does get a bounce at some point. I do think that, again, with the jobs number tomorrow, after the ADP, expectations are being brought down. Everyone's thinking, oh my goodness, we're going to miss on the jobs number tomorrow. If it comes in line, that's probably good for a rally in the market. So you might get a reprieve. You might get some bounces in some of these mega caps. Apple's had a huge fall just over the last week or so, even on that stock. All right, a couple other stocks making movement, but not worth trading in my opinion. We have this STNE, Stone Company. I believe this is a Brazilian company, but nonetheless, it is having a drop here from, let's see here. Looks like it closed yesterday on 1260. It's trading at 1140. If we go to the daily chart, double bottom is around 1140, which is kind of where it's trading, but I don't like that level. What I do like, what I would pay attention to on this, guys, there's a gap fill right here. Okay, so there's a gap fill right here at 1070. 1070 on the charts here. That does look like a good level. So watch that level, and if you get through that, you start getting into this area right here. That'll be a ton of support as well. So Stone Company, STNE is the symbol on that one. 1070 and then down to about the $10 even number. Looks very, very attractive. All right, so quickly before we get into a couple other things, just taking a look at the Microsoft chart. Let's go into that one here. I wanted to show you this because this is what I focus on. You guys know I'm a huge fan of these parallels. These parallels, once I discovered parallels, my trading really took another leg up in terms of understanding levels of support and resistance. And you can see why it works, right? I mean, again, you hit here, 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 you break down, and one of my favorite trades is the retrace to the scene of the crime. Breaks down, retraces, and then it should go like that. over and over again, you'll see this pattern repeat, and it's one of the best. So if you can draw your parallels in, and don't forget, TradingView has that. You just select it right here, and you go down to the parallels, and you can start finding the parallels very, very easily, connecting pivot lows, and then you drag that line up or down, depending on, and you can get those parallels. Another example of this would be Amazon. Look at Amazon here. I mean, this is a fantastic parallel to the point where you have low, 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 and low. In fact, the low of August 5th on that big dump was the low of the parallel. How do you know it's a parallel? Well, because you have your high, high, and high all aligning in that line. So what does this tell us? You came down to the low, and look at how the midpoint worked beautifully as well. You retraced to the scene of the crime of the midpoint, and now you're falling back down. And again, just another example of how these parallels work. All right, guys, we're going to just take a quick break, but before we do that, I just want to remind you, remember, we're doing a new thing. We're not sharing. You don't necessarily have to share the stream on your socials. What I want you to do, and I looked at some of the comments yesterday, this was perfect. I want you guys to find trades, could be crypto, could be stocks, could be commodities, that based on the PPT methodology, what I teach you guys, I call it the PPT methodology, price, pattern, and time, the 3 keys to the charts. Find something that has at least 2 factors on it and post it up. If you can find something with 3 factors, 4 factors, 5 factors, even better. I will be going through and selecting a winner that will win a big prize on the wheel. All right, so again, tomorrow we'll be spinning that wheel and selecting that winner from everyone posting. And I like doing this because it's essentially going to help you guys continue to isolate down your knowledge and put it to use. And really, that's what it's all about, right? Us all getting better at our analysis, therefore becoming better financially. All right, so on that note, we're just going to take a look at what the Apex Live Day Trading Room has in for it. Let's take it away. Hey everybody, welcome to the Apex Live Day Trading Room, where you're getting multiple pro traders with decades and decades of experience calling out trade signals as well as their own trades, entries, and exact exits for you guys over your speakers on your computer, your phone, your iPad. In addition, you're going to see our screen. So you're going to see, as we move our mouse on the screen on the chart, all the data, all the information that we're doing as we're making money as traders. We are translating that to you guys. Lots of education, literally from 9:30 to 4 p.m. with a small lunch break in between. Everything you need to make money as a day trader right here at the Apex Live Day Trading Room. All right, guys, we are back. Quickly checking in on Bitcoin here. Bitcoin had a good reversal yesterday, but remember, as long as it's below this pivot line, that's problematic. That means the bias continues to be negative, and sure enough, Bitcoin down ticking just a little bit today. Support number 1 looms large around 53,000, and again, as long as you stay below this pivot line, I would remain with a negative bias. And remember, it's not that I don't like Bitcoin. In fact, I'm a huge believer long-term in Bitcoin. It's just that's what the chart's telling me. I'm not going to sugarcoat it. I'm not going to pull any punches with you guys. If the chart's negative, the chart's negative. All right, if the chart's positive, the chart's positive. In fact, yesterday in my video to members, there was a chart that looked like crap, and we're long it. And I'm like, guys, this looks like crap. It is what it is, right? We just have to understand that. It's not everything's going to be great. Not everything's going to always work out. And so ultimately, again, I'm not long, by the way, in terms of a swing trade, nor am I short on Bitcoin, but just based on probability, the probability still is favoring a move to the downside to at least this point. If by chance, again, we establish ourselves above here and confirm, then all of a sudden the bias flips, and now you have a very high probability that we push right up to 69,000. So again, it's all about probability. There's no really, oh, but I really like it. No, that doesn't matter. The markets don't care. If the markets don't care, they're not going to care about you. They're not going to care about me. We have to go with probabilities. Otherwise, honestly, we're just going off emotion, and I don't know of any trader that's ever emotionally traded that has made money over the long term. Sure, once in a blue moon, of course, we all hit a home run. That's great. But again, more often than not, emotion causes you to strike out. Remember that. All right, next up, let's look at gold here. And if we look at gold, gold continuing, nice little bounce today on gold. One of the things to note on gold, look at this high right here, this high right here, this high right here, low and low. And we talk about kind of a level right there. And you can see how gold, again, pushed up, pulled back, pushed up, pulled back, pushed up, small pullback, broke out, retraced, and then a little bit of a move up. Now, what's interesting about this is you have this high level right here. So it's now hitting the opposite side. Can it break above this and now establish a new range up here and continue to move up? That's what we're waiting to see here. Maybe we'll know tomorrow on the jobs data. Silver real quick here, guys. Silver again, good bounce on silver. Got to give it credit here. So again, silver's within this larger channel that's down to the downside. And again, silver, if it pushes up, it's going to have resistance here, but then ultimately right up in that range. Lots of support here and then ultimately down in this range. But again, silver looking decent on the day. The question is, can it hold these gains and can it continue to build? Oil, guys, I did cover my oil short yesterday with members of Smart Money Commodities. We took over 10% just from this short, which, by the way, I told you the next day in the game plan, and oil was right here at that point, like right here. We took it right there. It was right there. So you can see the result of the methodology. There it is. There's your drop. Now you might say, well, why did I cover right down here? Well, there's a technical support just a little bit lower, and I explained to members that you have to start doing a risk-reward assessment. You know, you're up 10% on the trade. It's fallen sharply. Do you just try to squeeze that last little bit of juice out of the lemon and just try to get that little bit more with the risk that it bounces prior and goes back to the scene of the crime? Or do you just say, you know what? It's close enough for government work, as they say. Grab that money, put it in your pocket, be happy, and move on to the next trade. Because again, there's always another trade. Always another trade. Okay, so that's, again, nice little move there. We're getting a small bounce in oil today. Doesn't mean it's not going to eventually go lower, by the way. I actually do believe it's going to go lower. Natural gas, let's quickly tune into that one and take a quick gander. That was a pretty cool one yesterday. Because again, you came right up to that same kind of trend line zone here. We have this down-sloping trend line. There's actually an up-sloping, all of them kind of coming right in here. You hit that line and you got rejected. It's retesting it today. Can it break through? Maybe. If it does, what's my game plan? Always have a game plan no matter what. If it continues up, there might be a short here. This is the midpoint of this M top. That's generally going to be resistance, right? So if it does push up, my game plan is to potentially look to short a natural gas there. If it pulls back, would I buy this? I'm a little bit more mixed on that because, again, you know, this is getting tighter and tighter, and I worry that if it breaks there, then you'd have another leg down. But ultimately, that would be on my radar to reevaluate at least at that level. All right, guys, I am going to get over to the Apex Live Day Trading Room. Don't forget, folks, number one, Lawton here, one of our junior traders, every morning he does a pre-session to the Apex Live Day Trading Room where he's answering all questions. So if you're a beginner, if you're doing a one-time thing, I think it starts at 8:50 in the morning and goes to 9:20, so it does overlap with the game plan. But again, you can ask any questions. How do we run it? How do we call out trades? How do we do the position sizing? All of that he can answer in those to get you ready to really take advantage of the Apex Live Day Trading Room. And then as always, folks, we get in there. Yesterday, I have 4 traders in there. We all had 1 winner, so it was 4 winners yesterday. It was pretty darn good. By the way, we don't always have winners, but I'd say we win about 80 to 85% of the time, so it's pretty solid. On that note, I wish you the best of days. Don't forget, tomorrow's jobs data is key. Take care.